All right. Do I need to do anything except for share my screen? Hold on.
I think you're good to go. As long as you share, then we're running.
Tell me if you see anything or not.
We're good now.
You're good.
Okay, fantastic. All right. Well, first of all, thanks for having us here. My name is Philipp Pieper. I'm a co-founder of Swarm. And, you know, Jesse, Ben, and Zach, I think this has been an interesting format, and I'm glad to be part of it. So, you know, and thanks for everyone else for coming out. I'll sort of give you a couple of intro things about Swarm, and then basically jump right in and show you what we're up to. So Swarm has been around for quite a while. I joined a sort of the DAO project roughly 5 years ago. We've been sort of building sort of compliance and sort of tokenization technology open source as a DAO for the better part of the last 5 years. And then sort of, we were doing that actually out of Palo Alto. And then in 2019, I moved back to Europe. And this was around a time when actually the regulatory landscape became a lot more difficult, especially when it came to sort of things like asset tokens and how to actually do tokenization on chain. So this was around the time when actually in Germany, randomly, the last place on earth that I would expect anything to actually happen, Germany came out and actually amended the Banking Act. And we suddenly saw this as an opportunity to actually sort of, you know, see a regulatory actionable environment that was, you know, credible, that was sizable. And, you know, we basically saw the opportunity to sort of put our foot forward in actually building a legitimate banking outfit that then actually we could do all sorts of things with, which we're going to get into in a second. Fast forward to today, that's been a 2-year ride. If I was just saying this earlier, if I had like the tendency to lose my hair, I would. But in this case, actually now, you know, not once we're now here and being acknowledged by the local regulator called BaFin as a legitimate banking institution, there's all sorts of things that we're hoping to add to this space. And I think that's the one thing that I'm going to say before jumping in, talking about controversial things, right? So how can you know, put a term like DeFi together with a sort of a regulated term and with a banking term? And I think that's something that we want to discuss and have an open conversation about, where we think that by doing it the way that we're doing it, we can be additive to the space, that we can add new elements to the space, new assets, and connect to organizations in a different way. And in the end, maybe replicate some of the financial market onto chain and just, you know, open up new opportunities there. So when we say actually unified exchange for securities and crypto, that's obviously it's a directional statement. So we're actually sort of, you know, in certain elements already able to do certain things. And I'll show you something, how that looks like. So in the end, it's something where we try to be preserving all the elements that we think DeFi, you know, is key, has key characteristics of. So for example, obviously self-custody. So how can someone connect with the infrastructure that I'm going to show you? How can actually all these sort of incentivized liquidity mechanisms still be preserved? And still we can satisfy sort of the way that a regulator looks at us and says, okay, well, I need to know certain things. I need to be able to, you know, control certain things. But we try to actually build this around this notion that this is a, you know, something that preserves those key elements that we value very much. And it doesn't go too far in the other direction to make it too centralized. And so what this also then does is actually it gives a sort of a way to, you know, be compatible with existing wallet infrastructure, right? So what you see here is an infrastructure that is built on EVM. We're actually live on Ethereum and on Polygon. I'm actually showing you a dev environment because I want to show you some new stuff that is going to come up next week. And you can switch back and forth between the two. It looks, smells, and feels very much like, you know, Balancer in this case. So you can actually then say, you know, I want to buy SMT for, you know, for DAI, or sell SMT for DAI. I sell that here. It's going to fetch the, you know, the right kind of assets and the prices. Everything smells and feels really like a Balancer. Now, the one thing that is different here is obviously that there's something called Passport. So in the Passport section, it's a way where the infrastructure, which is a centralized onboarding system, actually allows the user to actually onboard, to do the KYC portion, and then connect different wallets to that experience, and not just one, but multiple ones. That information is not put on chain. That's actually centrally stored and obviously sort of kept under regulatory purview. But what it allows is actually then that this wallet that is specified here and qualified can then actually transact with the smart contracts just the way that you would interact with other smart contracts. So in the end, what it does is actually it writes an NFT into the wallet that is not movable by the user. That actually gives the wallet an interface to actually then interact with the smart contracts themselves. Then on the other side, there's different assets that are whitelisted to then be able to be transacted with. And the methods, obviously, we can also then determine what is satisfactory to the regulatory landscape to actually do stuff. In this case, we have the typical pool scenarios. So in this case, you see there's a pool, S&P USDC. Again, this is all not new. If you're actually used to using DeFi, you can see all the balances, you can see the swaps, you can see what the holders are. You can actually add liquidity, in some ways you can do that, up here or, as a single asset. So all that is tried to be sort of as consistent with what the experience elsewhere looks like as possible. But let's actually look at some of the other features that we've been starting to build out. So something called DoDC. For us, it was very important that any kind of trading transaction would be done smart contract based. So what you're seeing here is nothing is done on a centralized service at all. So in this case, I can say, oh, well, I'm seeing this offer here right now where one BTC or WBTC is being sold for 37,200 DAI, or I want to sell my BTC into that. I want to actually just transact with 10,000 on that. It's going to make the calculation. It's going to tell me that I'm going to now transact with 0.27 WBTC from my address. What this then does is actually sort of it takes the line item in the smart contract, inserts my assets from my wallet into that line item. It settles the trade, and then it actually sort of fetches the part of the other end. So if I want to create an offer, it's the same thing in reverse. So if I want to say that I want to exchange sort of WBTC for DAI, I can say, if this is actually one WBTC and I'm going to do this for 36,000, it's going to do all the calculations. I can actually then take external feeds to justify my price or not. And I can even do more things around that trade. So for example, I can say I'm willing to take partial orders here. So if someone actually sees this line item, they're able to to trade me 10,000 DAI and not just the entire 36,000 DAI in exchange for that. Or I can actually specify a private offer with a specific wallet address in exchange. And I can define also an expiration date, which means that obviously after expiration has hit, the line item is immediately not going to be fulfillable, and I can retract my assets as a result of it. Now, this all is basically sort of the first step, because in the end, and this has been actually live in markets for the past couple of months, the things that are now going to happen as a result of this is that we can actually integrate different securities. And we've actually published a new token standard that we've been building actually for the fluid interaction of a financial market with a digitized version. It's called SX1411. I encourage everyone to basically take a look at it, where we try to replicate a lot of the roles that are needed to do that. So there's a role for certain equities custodians to play a role, or auditors to play a role. We built trust fail-safes in there. And very, very much important is actually sort of the connective tissue to information. So something that we call KYA, know your asset, where you effectively then can take a look at what the underlying asset is, what has been self-declared, and in future, obviously, then look at asset attestations when trying to verify that. And then the whole contract also then has redemption abilities in there too. So if you actually have some kind of off-chain asset, whether it's another digital asset or whether it's a financial asset, you can then actually say, I want to redeem the internal asset, and then there's a procedure that actually happens as a result of it. So what you can see here on this picture already on this screen is that we're going to be launching actually next week the first staking nodes that are very much going to like work similarly how a compound contract works, where the rewards that are earned by the SOL staking node is basically that embedded into the claimable amount, and it's everyone's user's decision to actually receive the SOL actually on the SOL chain or in some other wallet that is compatible with it, you know, whenever they see fit. But it actually pulls all the staking node, including the rewards, into the same trading infrastructure that then allows them to build, you know, pools and composite pools for L1s, et cetera, et cetera. So yeah, I think this is basically a very, very, very quick rundown of what's coming. You obviously see that we're working on some stuff on the NFT side. In this case, it's not just NFTs in the current shape and form, but especially NFTs representing off-chain assets. And you know, part of the work that we still have to do and complete is actually some of the regulatory work on some of the prospectuses that are needed to actually do this as a framework. So quite an undertaking, and certainly not something that you can rush, but this quarter is going to be big for that. Thank you. I hope this was helpful for everyone.